Good morning. You're watching The Market right here on 18 with me, Aisha Faridi, Anisha Jain. I'm on the Bashan Studios, and for our markets, we're definitely a little bit in a consolidation mode. I guess the calm before the storm, or I don't know which way it's going to go. But yeah, we're a bit on the sidelines, but we're not complaining considering the run-up all the way to 19,500 just last week was just so swift. So that's okay. We can pause. And, to be honest, the headline number at 19,400 on the futures doesn't give you any reason to complain as it is. So, yes, while we remain range bound, we've seen two consecutive days of declines coming in for the broader markets as well. So, in a bit of a pause mode, I can't even call it decline, so to speak. But yeah, just looking at the individual sectors, the Nifty IT, and especially this is important because come tomorrow, you're going to be looking at for earnings from both HCL as well as TCS. IT has had the biggest decline in about a month's time. Nifty Metals, though, this was the saving grace along with Reliance, right? That managed to gain the most since May 23rd. And metals have been seeing a very, very strong bounce back across the street. So, yeah, FIIs, even though they've been buyers for a 9th consecutive session, but the quantum of the buying definitely has reduced ever since Friday, and that was the case yesterday as well. But yeah, some consolidation and a healthy one at that.
A healthy one at that, but the good news was that Reliance participated yesterday. Remember, for the longest time, we have been asking when will the heavyweights participate. Hopefully this week after HDFC merger goes through, that will be out of the woods. And Reliance already shown signs of a breakout yesterday. And what a solid breakout it was, because apart from Reliance, if that was not in the green by around 4 to 5%, the headline indices would actually be in the red, because Reliance alone was contributing around 80 to 90 points on the upside. It was the biggest single-day gain that we have seen on Reliance yesterday since March of this year itself. So quite a solid move coming in there. The delivery volumes are also quite interesting. In fact, we saw almost 2x of the usual average being taken up for delivery as far as Reliance is concerned. And now it's just 120 rupees away from its all-time high level. So just a 4% move. And hopefully Reliance will be scaling new highs, and it will take the markets higher with it, given the weightage it has. So Reliance is now the one to watch out for. That can really take the markets higher, but yesterday definitely belonged to Reliance. Though tomorrow it will be all about the inflation print.
It absolutely will. So the data points that we'll be getting from across the globe, that is going to clearly be the critical point. For now, you do have the major averages which snapped that 3-day decline. So you have the Dow Jones, which managed to gain about 200 odd points, the S&P 500 as well as advanced, and you have the Nasdaq as well, which wrapped up the day in the green. But yes, indeed, we'll be watching out for all that macro data. It seems that investors have penciled in that this time we could, in the Fed Reserve's July 25th, 26 meet, see another quarter point increase. But it's pretty undecided as to what could happen. But yes, the eye on inflation as well, and that clearly has the dollar falling to a 3-week low. This is against the yen as well. We will be watching out for that inflation print as well, and indices have turned quite positive ahead of that inflation print. The growth in consumer prices could have likely slowed down in the month of June, and voices from across the globe seem to be indicating that the inflation will perhaps now cool off to the 2% target. That's what the US Fed will ensure. Voices like Loretta Mester as well talking about how inflation continues to remain one of the main problems in the US, but the rate projection is at or a little above what the September median was, with Marley Daly saying that inflation print is too high and the US Fed needs to continue to raise rates. So that clearly continues to be the talking point across the globe, Aisha.
Yeah, I think the biggest talking point and a bit of a shocker which came by last evening has been Foxconn actually dumping that $19.5 billion deal with Vedanta to manufacture chips in India. And that came definitely as a surprise because, they said that they're pulling out of this joint venture which was set up to make semiconductors in India. And, this is a bit of a global talking point as well, considering Prime Minister Narendra Modi as well was campaigning quite hard to make chip making plans in India or plants in India. And yeah, Foxconn, which is actually Taiwan's largest semiconductor electronics maker and the world's largest as well, they had signed a pact just last year to set up a semiconductor and display production plant in the state of Gujarat. And all they issued as the statement was they're determined it will not move forward on the joint venture with Vedanta. And, they didn't quite elaborate on the reasons, so to speak. Foxconn said that it had worked with Vedanta for more than a year to bring a great semiconductor idea to reality, but they had mutually decided to end the joint venture, and it will remove its name from what now is fully owned Vedanta entity. Of course, the big question is how does it impact Vedanta today, because there will definitely be a sentimental reaction.
Oh, well, yes, and the big question is where will that $19.5 billion come from now? And of course, the technological know-how, given, as you pointed out, that Foxconn is largest when it comes to Taiwanese semiconductor industry. Where are we going to get the technical know-how from? Of course, the likes of Micron, etc. are still on track to come to India. And Foxconn has said that they are doing the individual factories at various locations in India. But as far as this deal with Vedanta is concerned, that's in a limbo right now. So we'll have to wait by and see how it really develops. The initial commentary from Vedanta suggests that they're still committed and they're looking for another partner. But when does that partner come on board will be interesting. Those are the comments running for you from the Minister of State for Electronics as well, Mr. Rajiv Chandrasekaran, defending the move, saying that India is still committed to the entire semiconductor, foray that they are making. And similarly, we got comments coming in from Ashnavi Vaishnav as well, wherein they said that both the companies are committed to the semiconductor mission and Make in India program. They might not be doing it together, but nonetheless, they are committed. So very interesting, the entire play out of events, and the timeline should also come up for you. How the entire thing was planned initially, a lot of approvals had come in place. They were looking to make the proposal again to the government with certain tweaks, and now Foxconn has finally walked out of the deal at this point of time. So that's the latest with respect to Foxconn and Vedanta. But I think what else is happening in the world, we have Vinny joining us to talk to us about what the global commentary has been like. Vinny.
Good morning, and obviously we're going to first start with Mohammad Al-Arian. He seems to be quite active on Twitter these days, and especially this week we have important data coming in the US as well. Let's not forget the CPI data, the PPI data will be coming out for the US market. Other than that, earnings season, that's starting off. So those are the key factors that he said that he's keeping an eye out on, and especially in terms of inflation, what he's highlighting, and according to the consensus forecast, he said that they expect the inflation data to come in at around 3.1% from 4%. Expect to see a fall there, and the core data to come in at 5.3%, from 5.3% to move to the 5% mark. So that's the update coming in from Mohammad Al-Arian in terms of the inflation data and what is he expecting over there. Other than that, Lawrence H. Summer, what he's highlighting is that once again the Federal Reserve, he believes, has actually underestimated the inflation, and that is basically for the 8th quarter in the row. And again, he says that now the Federal Reserve will be surprised in terms of what will they have to take in terms of the steps, given the inflation data will be coming out, and that is something that they're going to be highlighting in terms of how they'll have to take the next move in terms of the interest rate. That is something that the Federal Reserve seems like they will be surprised on the inflation front, as well as what the measure they'll be having to take in terms of the interest rate hikes as well. We have the next comment that is coming from Rafael Bostic, and he's reiterating in terms of overall that the Fed is going to make sure that it curbs the inflation, as well as he ensures that the inflation will return to that 2% target, which the Fed is concentrating on as well, and that is what he's re-ensuring and reiterating as well. Lastly, we have a newsletter that came in from Howard Marks and some tips coming in from for the investors there. He says that everyone can actually study economics, finance, accounting, and learn how the market is supposed to actually work, but the superior investment result will only come from exploiting the difference between how things are supposed to work and how they actually do in the real world. So that is something that an investor should keep an eye out on in terms of how they expect it to work and how the reality is actually.
Seems like all that commentary is centered towards the inflation print. Thanks very much, Vinny, for giving us that heads up. Let's move right on and discuss levels on our own markets. We've got Naresh Marani as well as Kunal Bothra joining in. 19,355 is where we wrapped up yesterday's trading session. And as we're talking about, Naresh, it seems to be in a bit of consolidation mode or a bit of a pause for the equity markets. Do you believe that that's going to be the trend for the rest of the day, despite the fact that heavyweights like Reliance Industries are really proving their might?
So what we've been seeing over the last couple of days or even a week is one of the heavyweights makes a move that gives a push to the Nifty, the rest of the market does not. And we are in this period of time wherein we've gone from 18,900 breakout to almost 19,500, 600 band. So a pause after such a move is normal, and that is what is required for the markets to keep going higher. And the best way to play this trend has been to right from 17,000 levels, higher tops, higher bottoms have continued. We've got this pauses at 17,400, 17,800, and so on and so forth. So for now, 19,500 to 19,600 zone remains a resistance. 19,200 is a support. And in this band, we'll continue to see stock specific action. The good part is over the last two sessions, also the broader markets have taken a pause. So that makes it better. So in this case, what we do is we wait for this consolidation to get over before we get into a new trade on the indices. For now, focus on the stocks and continue to look out for new trends and new sectoral rotations.
I guess, Naresh, that some of it played out yesterday itself. The heavy lifting was done by Reliance and metals. So what trades would you recommend this morning, stock specific?
So would be going more defensive, looking at stocks which are making fresh highs. First is a buy on Bosch Limited. The stock made a high about 19,400, faded off yesterday, so the entry point is still good. Looks the stock is eventually about to break that 19,400 to 20,000 band, go up to 21 to 23,000 in the short term. The longer term structure is also positive. The sector is in momentum. Everything auto and auto related has done well. Bosch has a lot to catch up. And out here, the structural charts are very interesting in terms of multi-year as well. So expecting a shorter term target price of 21,000 higher in the medium term. A stop loss to be kept at 18,800. Second is a buy on Bharti Airtel. The stock has slowly and steadily caught up on the uptrend, broke out above the 860 previous high levels, and has been holding on over the last few sessions as well. Very close to the tick which it saw on the MSCI day, and about to cross that 885 to 890 levels. Sustaining that could see a quick move towards 925. A risk reward trade here, stop loss to be kept at 870.
And Naresh, what's your take on the big mover Reliance that we saw that 4% gain yesterday? Do you think that's likely to build on gains today? And any top picks from the insurance space?
So in terms of Reliance, the stock structure is looking interesting for the fact that finally we've seen a move which has been with a gap up. Until now, we were seeing a 1 day, 2 day move and then a fade off wherein the stock again flips back lower. Yesterday was a good close as well. So this indicates it is all set up to try that 2850 all-time high mark and could see a pause around that 2850 levels. The trend is still positive, some more legs to go. But if it can sustain about this 2750 to 2850 band, that would make it a new leader. And given that it has more than a 10% weight, it makes the index much more interesting in the medium term. So overall, Reliance now, I would expect 2600, 2650 to become a base and 2850 to be the upper end. And eventually, once it breaks 2850, that is where the trend changes. And generally, a gap up move of 3-4% and a sustaining one for Reliance is a start of a trend most of the times. So ideally, we should not be seeing more downticks below 2600, 2650. It could consolidate at higher levels before it makes a move. In terms of life insurance companies, majority of them have really made a move of 30-40% from the recent lows. The only one which still has a catch up to do is Max Financial Services, which could catch up, and there is LIC of India, which has done nothing. On the shorter term charts, even a Star Health has come up. The stock is back to that 600, 620 mark, wherein it was a resistance for quite a few months. So the names which would be interesting is Max Financials on dips, LIC as a contra bet, and Star Health as a momentum one.
Okay, let's welcome on board Kunal Bothra as well. Kunal, hi, morning. Your Nifty as well as stock-specific strategy.
So on the index front, Aisha, I would believe that the indexes would consolidate further from current levels. So what's happening is 2 days back, we had a 200-pointer range on the index. Yesterday on the Nifty, the range was just about some 95 to 100 odd points on the Nifty. So that indicates that the range is narrowing for the indices, but still we are into a tight band of consolidation. So 19,200 is acting as a major support for the index. Closer we are on the spot levels, the better it is the risk reward to go for a buy on the index. Now, two buy calls which I would want to initiate. One would be Tata Steel. We saw the metal stocks coming back into favor yesterday. So Tata Steel is a buy, targets of 122 on Tata Steel, expecting a breakout over the near to medium term for the stock and stop loss to be kept at 111 for Tata Steel. And the second stock is Reliance Industries. I've been bullish on the stock earlier. My targets were close to 2750 from given the last week, but now I would reverse the targets higher. Looking at the way the stock has surged in momentum, 2850 could be a nearest target which one could keep on Reliance Industries. Would suggest a further buy even from current levels and stop loss at 2670.
On heavyweight Reliance Industries, that's one of Kunal's top recommendations. But let's move on and hear it out from Venugopal Gare, Managing Director at Bernstein. He says that he doesn't expect positive surprises from the IT sector, also throwing some light on how artificial intelligence is going to really play a big role. Listen in.
See, the broader thinking for us at this juncture is if you look at the outlook on exporters in general, which includes IT, it's not really that great. So I think that is the more important thing is it's actually known. So there are nothing called hidden, sort of strategic surprises that you're going to basically see in numbers. The reality is that things are going to be generally sluggish. So don't really expect any sudden positive surprises to come up. They should not. Which primarily means that numbers wise you'll probably see some weakness. There's always this risk of outlooks also getting revised down marginally or a bit. But at the same time, I would probably argue that valuations, from levels that they were about 1.5 2 years back have substantially come down to a large extent. So our view is that it is perhaps still logical to play IT selectively. We are playing it with one or two stocks, but the idea is that this would still be under the category of so-called contrarian bets, because if you were to get your next alpha over the next 12 months, perhaps at some stage this is going to bottom out. Because broadly, if you look at US as an economy, it is still relatively strong. So it is not that it is going to go into a deep recession. Plus this entire thing around AI, which in our views, IT services will be a beneficiary. And at some stage, people would start linking AI with IT services when they run out of ideas, in the frontline AI place, which is, all the semiconductor companies. So watch out for that, I'll probably say.
Okay, let's shift focus, and the GST Council will be meeting today to discuss several rates across sectors from SUVs and MUVs to online gaming as well as casinos. In fact, my colleague Prakash Priyadarshi is here with more details.
Yes, some important agenda are there for the GST Council for discussion and approval. Sources are informed the Council may come out with some clarification, which is with regard to ambiguity in tax liability on various products such as raw cotton and pan masala. We are given to understand that raw cotton sold to cooperatives may attract 5% GST under reverse charge mechanism. Sources are also informing that the Council may discuss comprehensive definition for sports utility vehicle and multi-utility vehicle to charge 2% cess up and above 28% GST. We are also given to understand that the Council may discuss GOM report on online gaming, casino and horse racing. When it comes to the proposal, which is with regard to providing GST exemption on millet-based products, sources are informing that this proposal is also on the agenda for the Council for its discussion. Fitment Committee of the GST Council has made this recommendation to the GST Council, and it is expected that the Council may discuss this proposal in its today's meeting. Apart from that, Council may also finalize rules for constitution of GST appellate tribunal. When it comes to providing exemption in 12% IGST, which is with regard to certain cancer drugs, this proposal is also on the agenda for the GST Council for its today's meeting. Some other important clarification may also come, which is with regard to GST rates on food and beverages sold in cinema halls. Sources are informing that the Council may clarify that GST rates on food and beverages being sold in cinema halls will only attract 5% GST rather than 18%.
Okay, thanks Prakash for that. We'll watch out for the announcement as and when they trickle in from that GST Council meeting. But the other thing that we are watching out for is the entire metal sector. Now, yesterday there was quite a bit of bounce back when it comes to the entire metal space led by the steel stocks. But that was quite surprising given the fact that so far in this year, the entire space has been a stark underperformer. But are there now tailwinds that can support a further up move on the metal stocks, and what are the key triggers to really watch out for? Asesha is joining us with all those details. Hi, Asesha.
Yes, metal stocks are in action yet again after significantly underperforming the benchmark indices in the first half of the year. Looks like the trend is reversing. Remember, Nifty 50 index gained nearly 6% in the first half of calendar year 23 at a time when Nifty metal index was down nearly 8%. But now in July so far, Nifty metal index has outperformed with an uptick of nearly 3%. Global macroeconomic challenges, fears of recession, rising dollar, rising interest rate were the primary reasons why Nifty metal index underperformed in the first half of calendar year 2023. But looks like some sector rotation is happening, and policy support from China is also spurring some uptake as far as metal stocks are concerned. Remember, Nifty metal index hit that lifetime high of about 6,900 in January this year, and now it is off nearly 6.5% from those lifetime highs. Uptake in Chinese demand will be a key trigger for the commodity sector from now on. But as far as brokerages are concerned, analysts do believe that steel prices seem to have bottomed out from now, and export prices of HRC steel also look comfortable at this point in time. So yes, action is seen visible yet again as far as metal stocks are concerned.
Okay, Asesha, thank you so much for joining us with that quick take as far as the metals pack is concerned. But the entire metals pack, and especially Vedanta, will be in focus on account of the news flow that we just elaborated about earlier. Let's discuss all of that with Rakesh Arora. He's joining us to talk to us about the entire space. Rakesh, let's begin with the stock of Vedanta. It came as a bit of a surprise with respect to Foxconn walking out of the deal. And now the question is, A, where will the Vedanta get the money from? And secondly, what happens to the technology that they needed? Your take.
So I would say that, this deal was never in the making, and nobody in the market expected it to go through, because if you look at Foxconn's history, there's a string of broken promises that they made across various countries, including US, Indonesia. So people were, not very confident that, Foxconn is a serious player. And secondly, Vedanta itself, is going through a lot of financial issues. They don't have the wherewithal or the funding to be able to do this kind of big project. So this thing was a non-starter from the day one, and it doesn't come as a surprise at all that, this has been called off.
That's quite an interesting take, Rakesh, I must say. But tell me then, so neutral impact on Vedanta or no impact, you think?
There's no impact. Nobody expected anything. Nothing is happening, and that's the status quo.
In your take, Rakesh, as to what is going to be now the next course of action, perhaps from Vedanta, in terms of the options that are laid out, because it was in May this year as well that the joint venture was reported to be struggling to tie up with a technology partner. So how do you think they can leverage the overall tech expertise now?
Vedanta is struggling for finances. There's no way they can take this kind of project. So, I think all this is wishful thinking on the part of the promoter. This is an absolutely high capex project, which is beyond Vedanta at the moment.
Quite interesting. Right. Let's just focus now to overall what's happening in the entire metals basket, right, Rakesh? And what brings about this renewed vigor that we saw yesterday?
So, as Asesha was mentioning, it's a case of rotation into, different sectors, because market is trying to sustain itself. So whatever is, hasn't moved up and looking a little bit undervalued, people are moving to those stocks. So metal is gaining out of that. And second is obviously the noise around China stimulus, which is also buoying the sentiment. But according to us, China needs to do a lot more to really move commodity demand this time around. And that's difficult to visualize happening at the moment. So I would say that it's just a, pop-up driven by the market conditions.
Don't think it's going to be sustainable, this move in metal stocks?
No, I don't think it will sustain unless China really comes out with a big bang stimulus. What they're doing currently will not move the needle at all.
Sure. If at all, one does see a sustained move on the metal stocks or the news flow from China does manage to aid the stocks further, what's your pecking order when it comes to metal stocks?
So I would say that, the longer-term theme in metals is basically renewables and electrification. And base metals will tend to do much better than the ferrous metals. So if somebody has to take a bet, I think it will be, non-ferrous metals.
Appreciate your take on the metal sector as a whole, as well as your opinion on how the story is playing out between Vedanta and Foxconn. Well, let's move right on then. And with the markets hitting all-time highs, ace investors like Radhakrishnan Damani, Dolly Khanna and others have been taking out their shopping list. While some have made changes to their holdings, let's find out what the smart portfolios look like at a time like this and which stocks have made it. We've got Sharad here to walk us through the lists. Sharad?
Well, yes, we'll be taking the changes in the shareholding pattern which has happened and what the new updated numbers is coming in for the quarter ending June. Now, do remember Tata Communications, Rekha Jhunjhunwala's portfolio, there is an increase of 5 basis points when it comes to ownership, while there is a slight decrease coming in for roughly 11 basis points when it comes to Raghav Productivity. Apart from this, Radhakrishnan Damani, we see one stock is in focus, that is United Breweries. Over here, there has been a slight increase in the holdings, roughly almost 2 basis points. But if you look at the action coming in the small cap space, especially, its a focus will be on the funds held by Dolly Khanna. And over here, we see small cap names such as Nitin Spinners, Talbros Automotive, and even Mangalore Chemicals. All three of these stocks we are seeing there has been an increase in the positions going ahead. Apart from this ace investor, Ashish Kacholia's portfolio is something we should be watching out for, where we see Shaili Engineering Products. Over here itself, there has been a 99 basis points fall in it. But while for United Drilling Tools, that itself, the shareholding has actually gone below the 1%. It's a likely exit as well as what the street is expecting. And lastly, I'd like to point out Vijay Kedia's portfolio. A lot of action coming in there as well, especially in the infra names. And we have Elcon Engineering, he has reduced his stake by almost 16 basis points, and Talbros Automotive also, there has been a reduction. And last night, an important update coming from Patel Engineering with almost a 39 basis points kind of increase with almost 1.68% stake in the company. So a lot of important developments coming in when it comes to the ASD Street investors.
Okay, we'll leave it at that, Sharad. Thanks much for highlighting what the HNI portfolios are including as well as excluding. On that note, we're going to take a very quick break. The GIFT Nifty once again is indicating a quiet start for us, so seems like some more consolidation on the cards. Back with the market right here in ET now. Let's just revisit what the GIFT Nifty is indicating. Just a very mildly positive start at that, and just holding around that 19,480 odd level in trade. Yesterday, of course, it was all about Reliance and then all the metal stocks, which Rakesh just highlighted. There's nothing fundamental to it. It's just basically a sectoral churn which is taking place in the market. What really got battered was the IT pack ahead of the big earnings, which are going to kickstart from tomorrow with TCS as well as HCL Technologies. And then Titan, after that Morgan Stanley downgrade coming in on that stock, that was also weighing quite heavy. So let's revisit some of these names. Kunal, any hope with IT, TCS or HCL, which are going to report their numbers tomorrow?
Very difficult to say that, Aisha. But, the approach for these IT stocks is not on a confident note. So, I was actually expecting that many of these IT stocks would go into a more of a short covering mode going into the results, and especially the large cap names, which have been big underperformers, the likes of Infosys as well as TCS, even Wipro in that regards. But I think, there is no evidence of short covering. The OI is more plateaued, over the last many days, which means that market participants are not expecting, too much variation in terms of the results. But then I think the approach for the market is possibly that wait out for the results in case if the stocks correct very sharply. That's where I would believe that there could be opportunity which could arise into these names. Looking at the price action, the range for these IT stocks, large cap names specifically, there is hardly any major indication that which way the results could probably swing. So I think it's always better to try and now position the IT stocks on the large cap names post results. In case if these stocks rally by say another 4 to 5%, then I think it could be a good opportunity, because that's where a lot of confidence would start to brew in. or else if these stocks correct by say another 5 to 10% on the downside, then the risk reward could be attractive from a medium to long term play.
Okay, let's see the risk reward being positive for the medium to long term, but for now, at least in the immediate term, it does not look very good for a lot of agrochemical companies. Of course, last week we saw a guidance cut sort of as well as profit warning coming in from Clariant, and now there is another big agrochemical company, FMC, which seems to have cut their guidance. Is it coming as a surprise at all, Somit, and what's the street making of this?
Well, firstly, it's the fifth largest agrochemical company, and secondly, it's not coming it as a surprise because there has been a trend that we have been seeing for agrochemical companies cutting the earnings estimate, but the cut is much sharper. Now, for the second quarter, if you see, they have lowered the EBITDA guidance by nearly 48%, and the revenue guidance has been cut by nearly 30%. And for the entire calendar year, they have lowered their revenue guidance by around 14%, and the EBITDA guidance has been cut by nearly 12%. Moreover, they have not given their EPS and free cash flow guidance for the entire calendar year 2023, and they are saying that they will be able to give a much clear picture post the report the second quarter calendar year 2023 numbers, and that is expected on August of 2nd.
So, Sumit, how does it link to Indian agrochem stocks?
Well, if you see UPL, Rallies, Sumitomo Chemical and PI Industries, these are the companies that would remain in focus. For UPL, it's a major contributor, that is the products that FMC sells and UPL sells are majorly the same. And what FMC is saying that due to high inventory buildup, they're seeing a sharp 30 to 70% drop when it comes to pricing. And thus UPL is the one company that would be impacted the most, because the entire street was expecting that the first quarter numbers for UPL would be weak. But what the commentary coming in from FMC is suggesting that even the second half of the calendar year could well be weak for these agrochemical companies. But for PI Industries, on the other half, if you see, the impact is not expected to be much because what analysts are suggesting that only 5% of the revenues of PI Industries come from similar products. So a lower impact for PI Industries, but a bigger impact coming in for Rallies, UPL and Sumitomo Chemical.
Okay, a lot of those companies to watch out for, but IT, as you talked about, that was the sore loser yesterday. Probably today as well, there's a JP Morgan note which doesn't look very exciting.
For engineering, research and development companies.
Yeah, specifically they're picking out the companies like LTTS, Tata Elxsi, KPIT, Persistent, and all of these companies have run up massively as well.
Exactly, they were the outperformers so far in the calendar year that we have seen. For specifically for L&T, it was up 6%, but the other companies like Persistent, KPIT
has been one of the top gainers of IT this
KPIT
year,
in fact
right?
52% up on a year-to-date basis.
And this is after the kind of cuts for Tata Elxsi, etc. that JP Morgan had already seen. They are saying that there is more case for a de-rating now, because the point that they are raising is that the slowdown that we are seeing right now is not cyclical in nature, but it's structural in nature. The kind of ramp ups that we saw last couple of years was only on account of those digital spends coming in for COVID, and they believe it's not going to be sustainable. Auto ER&D is one vertical that they do believe that the investments will continue. That's why for the likes of KPIT and Tata Elxsi, things might be a bit better. But other than that, they're expecting sharp de-rating going forward, because they're saying that the street is already building in that 18 to 25% kind of growth, which doesn't seem sustainable over the long term, because the street is already factoring that for the next 5 to 7 years. Yeah. Now, 3 years visibility might be there, but not 5 to 7 years. And that's why they're expecting, further cuts to come by. Let's see what these companies report at this point of time, because for now, their target price suggests that there could be a downtick of anywhere between 15 to 50% from the current market prices. So quite...
The bigger one coming in for Tata Elxsi, I believe.
I'm sorry?
The bigger down...
Yeah, the 50% cut is actually for probably KPIT Tech and Tata Elxsi, because they had run up also.
Yeah, it's run up.
Yeah, and also they're alluding to the fact that during the COVID time, there was a forced digital spend, etc. So now that perhaps is behind us.
Let's see how it turns out, because for now, at least in the immediate term, I think the earnings will continue. I don't think there's a challenge, and especially for the managements like KPIT Tech, they have been quite clear that the story is there for the next 5 years. Let's see whether the street is banking too much on it or not. Thanks, Amit, for joining us and talking to us about these whole host of issues. But let's take this discussion forward with Sandeep Sabharwal as well. Sandeep, let's begin with some of these IT names itself. JP Morgan believes the R&D companies, the likes of Persistent, Tata Elxsi, etc., have run up ahead of their fundamentals. Do you concur?
Yeah, so what always happens is that in an industry which is going through a tough time and only a few companies are performing, the investors as well as speculators tend to flock towards those stocks, which creates a valuation bubble of sorts, which we could say is there in these companies, but they have also surprised in terms of their growth, etc. So The jury is still out how whether they will fall by 30-40%. It is tough to predict, but upside looks limited at this stage, given their sharp outperformance and the fact that discretionary spending cuts are still at play among companies. So, IT companies will suffer in the near term because of that. And recent commentaries by US Fed officials also indicate further hikes possibly. So, that also could keep uncertainty in the minds of CEOs of corporations, which would again postpone decisions to spend on IT, which is postponable. So I think the time overall to buy IT still gets pushed back, and for these specific companies, the upside obviously is limited.
Indeed, still some time away before IT dark clouds actually get cleared. But Sandeep, what to make of this geofinancial demerger? The street is almost reading it as a precursor or, beginning of the process of the demerger of eventually geo and retail.
So I think people can read whatever they want, but my reading of the way Mr. Ambani has operated his business, Mukesh Ambani, is that they would like to keep everything in the same basket, unless and until there is a demarcation of the businesses among his children, and to that extent they need to demerge. So that's something which could happen, could not happen. But overall, Reliance had underperformed significantly, so I think that underperformance is getting corrected right now. And eventually, I think at 2750, maybe now the upside starts getting limited, and so from here, the upside I would think is limited in Reliance in the near term.
Upside is limited in some of the IT companies in Reliance. Then where is the upside, Sandeep? Which are the pockets which look still attractive, or even stock-specific names, if you can discuss that?
So I would think that on the large cap side, financials still have some upside. Stocks like Bharti, which have consolidated for a long time, could have some upside. Many of the auto companies could still have upside. From a pure index level, from significant undervaluation in March, we are now into fair to slightly above fair valuations. So another 5% higher than the upside in the near term starts getting limited. So I think that's what we have to recognize. So then we'll have to play it time wise, see which stocks correct and buy into them. Capital goods side still looks good. So the moves have been slower, although the clarity in terms of growth has been growing. So I think something like L&T could continue to do well. But on the large cap side of the market, overall, the overall upside now seems limited, at least in the near term.
Has come out with a note as well on Bharti. The target is now 1030 on Bharti, and it's a strong buy. They're saying that India's cloud market of about $6 billion is likely to triple in the next 5 years to almost about $17.8 billion, and that Bharti has been boosting their capabilities of cloud services with their growing partnerships. Their subsidiary, that's Nextra, is also targeting to triple their data center capacity to about 400 megawatt by 2025. And cloud and data centers are going to boost Airtel business growth and add upside potential. So therefore, this buy and a target price of 1030 on Bharti is what they have put. Kunal, quite a bit of consolidation on Bharti, right? When do you see the stock hit that 4-digit mark?
Actually been good momentum which has come back for Bharti Airtel. So, the stock which is, so you look at it from the March lows, I think the stock was at 700 or 720 odd mark. From there, the stock gradually moved on to that 800 levels. In the last couple of days, the volumes, in fact, yesterday, day before, the volumes for Bharti Airtel were at a multi-day high on the NSE. The stock yesterday made a high of 885 approximately, which was a fresh high for Bharti Airtel. So momentum, volumes, price trends, all of that is coming back for Bharti Airtel. And it's been a stock, we've discussed this over the last so many years, that it's been a stock which has been a very slow, gradual, and a moderate beta kind of a trend. So whenever Bharti Airtel tends to get into an upward trend, it's more of time-wise longevity rather than more of price-wise traction the stock sees. So I would believe that what we're seeing over the last couple of months for Bharti Airtel could actually be a start of a major multi-month uptrend. The volumes coming back and the price trends indicate that the stock should be good for more high returns on the upside. Now, looking at the average return, over the last 3 months, the stock tends to generate around 15%, 10 to 15% as an average return over, a period of 6 to 8 months. So we can expect that possibly another, 10% on the upside could be a near-term target for Bharti Airtel, given a time frame of 36 months.
Okay, many month uptrend is likely to continue on Bharti Airtel, but the stock which has been on a massive upturn for now has been Tata Motors. It's high by 60% this year itself, and most of the analysts on the street are still positive on the counter. And one such person is Pankaj Pandey as well. He's quite bullish when it comes to Tata Motors. Listen into his rationale.
I think it's been one of our top performers. Our target on Tata Motors is 700 rupees. Now, when you sort of look at JLR, volumes are 93,000. So I think it is better than what even the management had guided or even what we had taken at about 90,000 odd. And good part also is that on the domestic side, some of the laggard segment like CV, the volume growth was quite decent. And margin profile there is sort of improving for almost all the players. I mean, not only for Tata Motors, but even for Ashok Leyland or even for Eicher. So I think you're getting volume growth plus you're getting margin improvement. And I think given the fact that overall capex as a cycle is still looking quite good, so our sense is that Tata Motors will sort of continue to sort of do well, and along with yes, obviously you have triggers in terms of Tata Technologies getting listed. So I think we continue to sort of like Tata Motors, and our sense is that 700 is on the horizon for this stock.
Okay, so that was about Tata Motors. So quickly, let me take it across to Naresh. Naresh, your view on Tata Motors, you concur that it's headed to 700 plus. And since we're talking about stocks hitting 4-digit, when do you see that happening for ICICI Bank?
So I'll start with Tata Motors first. Now, the case is all of us have been bullish for quite some time. And now is the time where it can take a pause. Yesterday's price action was the first indication of a pause coming for the stock. Now, if you look at the speed of the rally, it was at 420 back in April. And now the stock went up to 630 level. So that's more than a 50% move or closer to a 50% move in the last 3 months, 3 to 4 months. The previous all-time high for the stock was around the 600, 620, 600 mark. It's tough for a stock to actually run away from previous all-time highs, which were made in 2015 to 16. So some bit of a pause around the 600 mark is expected. Could be a few weeks, could be a month or two also in this case. So I would expect some bit of a consolidation, and then maybe it crosses above this 630, 640 mark and makes a fresh move towards 750 also. So the trend is strong, the structure is strong, but a pause is needed after such a move. So waiting for a dip closer to 560 to 600 mark is where you want to start accumulating the stock again. Then coming to ICICI Bank, now this has been a stock which has been flirting with that 960 mark for the last 4-5 sessions also, and even the last couple of months. 960 was roughly the top back in December 22, also the top in May, June, as well as in July right now. Once it sustains 960, the next target actually comes out to 1100 plus levels. So 1000 is something which was just not far away as such, could happen quickly. But once it sustains 960, that would be a short-term cup and handle formation, which would have a minimum target price of 1100. So bullish on ICICI Bank, waiting for price action to confirm the breakout.
Vedanta, that's going to be the key stock that we're going to be looking at for right from the pre-open rates, I think. The manufacturing deal with Foxconn for semiconductors has been called off. Although we were chatting with Rakesh Arora from Macquarie, he believes that it was never going to materialize in any case, and this was a very, very ambitious project on part of the Vedanta group. But Sandeep, sentimental knee-jerk, I'm sure, is going to kick in on Vedanta today.
Possible, but I think the jury is still out whether going ahead with that huge investment was better or this is better. That doesn't happen for Vedanta shareholders. in any case, I think the entire commodity market is a tough market at this stage, given what's happening in China. So, in general, it's a avoid kind of stock.
Okay, that's the view coming in on Vedanta and Sandeep's take on what exactly this news means. Meantime, just wanted to get in a chart check going then. And Naresh, your view on autos. In yesterday's trading session, it was across the board that the entire auto sector came under a bit of pressure. Maruti, M&M, Hero MotoCorp, what are the charts trending like?
So, in terms of auto, my view is we are going to see a new leadership come in. So, it was earlier about Mahindra and Mahindra, which did really well. And there was TVS Motors, which did well. Then it was also Bajaj Auto, which surprised. And now the new stocks which come up on multi-year breakouts. One is Ashok Leyland. Now, if you go back to look at Ashok Leyland, the stock was at 170 back in 2018, also was at 170 in 2022, and just in the last 1 month, also a couple of times it has tested 170. So that's a huge cup and handle formation of 5 years plus. So this could take leadership. It is very similar to what Mahindra and Mahindra was when it started off that run from 1000 levels. And now Ashok Leyland could be the next one in the same segment. Similarly, in the two-wheeler space, it is about Hero MotoCorp. The stock finally showed momentum, broke out above that 2950 to 3000 mark, which was a resistance for the last 2 years. Also, the stock has done nothing from 2015. So this is a stock which could slowly and steadily go to 3600 to 4000 levels. So Hero MotoCorp is a buy on dips. Any retest of this 3000 band, the breakout area would be adding opportunity. So that is one. And the last one is Maruti, which from closer to that 10,000 mark back in 2018, the stock has gone nowhere for the last 5 years. And again, testing that 10,000 mark in the last few sessions. So these are the three names which are making structural 5-year breakouts. And this is a basket and three different stocks from three different segments of auto. And this could be the new leaders going forward. So expecting one by one these three of them to actually break out and create fresh trends.
So spotting the new leaders when it comes to the auto space. But Sandeep, just quickly wanted your take regarding car trade, if you track that one, because they've announced an acquisition to the tune of around 540 crores buying the auto business of OLX. What do you make of it?
I don't track.
Okay, you don't track it, but Kunal, do you track car trade charts? And other than that, Zomato, Paytm, PB Fintech as well?
I don't track Carted as such, Nisha, but I think on the new age stocks, Zomato, Paytm, as well as Policybiz, etc. We discussed this almost a week back when I mentioned that many of these stocks have come back into their overbought territory. Now there are two types of possibilities which could happen when stocks enter into their overbought territory after a steep run, after a run of more than 30 to 40% in a very short span of time. These stocks can go through a V-shaped correction, which could probably bring in a zone that there is more of reduction in the positions or profit booking which happens, or there is a time-wise consolidation which happens. What these stocks are actually going through is the likes of Paytm, Policybazaar, Zomato is more of a time-wise correction. And I think it's a good sign because in a time-wise correction, the indicators, they come back into a moderate zone or a mean zone. And that provides an opportunity to try and re-enter the stock again because the trends are almost intact. The position sizing is intact into the stock prices. So I would believe that this is a healthy consolidation which is going on for these new age stocks. I would still believe that the likes of Paytm could probably see an upside of another 10% over the next 3 to 6 months. Policybazaar I'm extremely bullish on. Would look out for a target in the range of 775 to 800 approximately in the next 3 months or so. And even for Zomato, I would believe that the next leg of rally should take the stock back about that 80 plus mark.
Fintech, Zomato, car trade, those are some of the stocks that Kunal is flagging off on the charts. But Sandeep, wanted to get in your take on the kind of move that we've seen in some of these tire stocks with the fact that we're seeing raw material prices as well cooling off and pretty strong demand. Is the road ahead looking strong for some of these tire stocks?
Yeah, tires overall, I think at least companies like which are domestically focused with some exports and overseas operations like Apollo Tires, which remains the best company, followed by MRF, C8, and then JK. All of them have things going for it simply because of the fact that industry is now consolidating. People are not going in for aggressive expansions, and there's going to be cash flow generation across the board because these companies have realized that if they keep on doing excessive capex, then it leads to prices being under pressure on the in the markets, and no one gains out of it. So all the large players have decided to take this stance that they are not going to be aggressive expansion. They're actually going to cut down debt, etc. So among these, Apollo Tyres is something which we have held for a very long time, and I would still think that it should do well. But all others should also do well.
Right. You know, like Samit was just highlighting, the entire agrochem pack is going to be in focus. And FMC, which is the world's fifth largest agrochemical company globally, they've actually revised their guidance lower, citing reasons like high inventory built up in generic agrochemicals, the drop in prices to the tune of about almost 30 to 70% year on year, and the challenges then in pricing volumes for generic ingredients as well. How does it impact Indian companies? Well, surely the likes of UPL as well as Rallies do get impacted, and especially UPL, given that its portfolio is pretty much similar to that of FMCs. But Sandeep, would you say that a decline like this could be an opportunity to buy, maybe not immediately, but maybe some time ahead?
Yeah, I would agree with that. So I think 3-4 months down the line, when these prices have come off because of bad results, etc., we could buy them because these are cyclical industries. These are not secular growth industries. So you need to time entry into these stocks. So I think agrochemicals is a space which we cannot ignore, and we could look for opportunities as stocks correct. On the other hand, chemical, specialty chemical, I think they could be under pressure for at least the next 1 or 2 years.
That's the take coming in on some of these agrochemical companies. But Sandeep, what's your view regarding the entire defense pack? They are back in focus on account of the Prime Minister's impending visit to France, and there's a large deal which is likely to happen there as well. We'll shortly get our colleague Srinjoy also to join us and talk to us about that. But your take as far as the defense pack is concerned, do you think they have run up considerably already, or there is still more upside in some of the names?
Yeah, so it depends on the time horizon of the investor. So I think for someone who has a less than 1 year outlook, I would think that the upside in many of these companies is very, very limited because it's become a very crowded space. All retail investors, everyone is just climbing onto them. You have specific funds launched for defense, etc. So I think typically that happens at the time when the sector becomes too hot. Now we need to wait for better opportunities to buy. For someone who has a 3-5 year horizon, they could still be upsides. But then after such humongous straight line upsides, normally corrective moves could also be severe whenever the market corrects. So I think people need to be aware of the risk while buying these stocks. Longer term outlook is still okay.
The word on defense, and L&T as well has said that it signed a teaming agreement with Spanish-based Navantia for the submission of a techno-commercial bid for the Indian Navy's prestigious P-75 India submarine program. Here's an excerpt from that event.
So this is, as you correctly and rightly pointed out, probably one of the most important programs for the government of India, our defense, our Navy, and of course for Larsen & Toubro. We have been involved in this defense program over the years. Certain strategic assets are made by us. But having said that, most important thing in all this is how to do a Make in India. And to the extent possible, Atmanirbhar and all these very complex programs. Though we have done quite a bit on our own, it is important that when you enter into a program like this, we try to maximize the Indian content of it. We found the right partner in Navantia, who's known to us for a very long time. We could enter into an agreement which ensures total transfer of technology, including the critical technology of Atmanirbhar.
This is such a major project. If you could give us a little detail about the project, how many submarines, we are hearing 6 under P-75, where you're going to make them, what percentage of indigenization there will be. I imagine it will be gradual, it will be less initially and more towards the end. What the total costs will be. These are the 4 big moments.
Some of these, I don't think I can so explicitly say that, but as you correctly said, these are 6 submarines. Our factories and heavy engineering workshops in Hazira are already are capable of making it, and we are making some of these strategic vessels there. So this will be continued to be fabricated in what is called as the AM Naik Heavy Engineering Complex at Hazira. We have factories which are ready for it, which have the height and width and the gantry cranes capable for handling such huge diameters of vessels.
Okay, that's the word coming in from none other than Mr. Subramaniam from L&T. Sandeep, we've often chatted about, the prospects of the entire defense sector. Some of these stocks have run up a lot, now concern in the market also about the valuations getting overage. But this sector aside, I just wanted to figure out, what do you see about the next fad in the market? That's the railway stocks. What do you do with those?
Again, on the railway stock side, many of the stocks have run up too much too fast. We do own a few of them, but then for new investors, I think they should uh, try to. So I think timing becomes very tough when the growth paradigm has changed so much, and many of these companies which went into losses could actually be making hundreds or some even go into four-digit crore profits over the next 2-3 years. So I think that's the challenge. How when stocks go up 4-5 times in a short period of time, what do you do? So I would still think that story is there, but then given the fact that some of these stocks which we also own, like Pitagar and all, like the stocks gone up almost 5 times in just 1 year. So it's tough for that to sustain. So I think there are two strategies. For people who are holding, there's no reason to sell because the growth outlook is still so strong. But for people who want to buy afresh, I think they should wait for dips because eventually when a sector becomes very hot, the dips will also come in between.
Sandeep, good to have you on board. Thanks so much for joining in and sharing with us your outlook on the fundamentals as well as individual stock calls. Let's shift focus then to the flows picture and talk a little bit more about how that's been trending with the benchmark indices. Which are some of the new entrants? What kind of inflows are we expecting? We've got Harsh here to get a detailed snapshot. Harsh?
Well, yes, let's first break down the indices constituents and how those will really move. So first off, we're going to see on the Nifty Bank, HDFC Bank's weightage to go up from 27% now, 29%. We're also seeing on the Nifty 50, HDFC Bank's weightage to come in at 14.4%. LTI Mindtree is going to be the new entrant into the Nifty 50. All know that. But weightage to be at around 0.5% or thereabouts. In terms of flows itself, you have within the Nifty Bank, HDFC Bank to be a beneficiary there, $70 million of net inflows to come in. ICICI and SBI to see some amount of outflows there. On the Nifty 50 front, we have LTI Mindtree to see around $100 million worth of inflows. We have RIL and ICICI Bank to see marginal outflows. And on the Nifty Next 50, we are expected to see JSPL benefit $32 million worth of inflows coming in there. And on the Sensex, we are expecting to see JSW Steel benefit $145 million of inflows expected there. Of course, July 12th, the cutoff, July 13th, the date of the merger.
All right, thanks very much for giving us those details, Harsh. Meantime, just wanted to get in a check, Kunal, from you as to what the outlook is when it comes to the dollar index, given that it has retreated to that 2.5-week low on account of the jobs data. What's your understanding of the charts?
Dollar index has been trending down. We made this observation in the month of September 2022 at 114.15 mark that dollar index has gone to a top out formation. But apparently on the downside, there has not been any major bottom formation which has happened for dollar index. Even when the dollar index was consolidating at this 102, 104 range for the past 2 or 3 months, it was not as if that the indicators are coming to an oversold territory and we were expecting a bounce. The indicators are still above the oversold territory, which means that it could go into a gradual cool off from here on. So what's actually happening on the charts in terms of the price patterns is the dollar index making a triangular kind of a pattern or in descending pattern for itself on the weekly time frame, and that doesn't augur very well for dollar index in terms of price points. So I would expect a gradual shift lower for dollar index possibly a retest of that 100 mark, and even going below that 100 levels could be a strong possibility in the next 1 to 3 months.
Get going on some mid-cap strategies as well. Naresh, what's on your list?
So that would be a buy on IFL Finance, and the stock made a new 52-week high, an all-time high here. Very interesting chart in terms of the consolidation it went through over the last few months. Now, if you look at the stock has consolidated around that 520, 530 mark. Yesterday was a clean breakout, expecting this to go towards 600 in the short term, a stop loss to be kept at 525.
What about you? What's the top mid-cap idea?
Well, I'll stick to PSU banking names, and Canara Bank is a stock which I would suggest as a buy. My earlier targets, which I had given yesterday, was closer to 340. The stock is very close to those kind of levels. I would believe that from a short-term trading play, this could look at a revised target of 344 on Canara Bank. Keep a trailing stop loss of 328.
That's the take coming in top mid-cap strategies, but let's also watch out for some of the big headlines coming in from across the globe as well. First up, the Wadia Group is likely to be in talks with financial investors to make a bid for Go First. According to the Economic Times, Wadia Group is in talks with several PE players and investment funds to jointly bid for the beleaguered Go First airline, of which the Wadia Group is the erstwhile promoter. Meantime, we are watching out for car trade tech as well, because it is acquiring online marketplace OLX auto sales business for around 537 crore rupees. Car trade will acquire 100% stake in Sobek Auto, which houses OLX's automotive business. Remember, OLX's parent company Process has stated that it plans on expanding in the auto sector in India. Meantime, the big headline is actually coming in with respect to Threads. Instagram's Threads app has reached 100 million users within just 5 days of launching. Number of users have surpassed ChatGPT already, which took 2 months to reach that number of 100 million users, which Threads has managed to do within 5 days itself. While popular video sharing platform TikTok achieved the same milestone in as many as 9 months. In comparison, Instagram itself took 30 months to reach 100 million users after its launch back in 2010.
Meantime, in a major geopolitical development, Turkey has agreed to go back to Sweden's bid to join NATO. This comes just a day before the member countries are set to meet for a summit where the stage is set for the allies to showcase their unity. The US President Joe Biden has said he looks forward to welcoming Sweden as a 32nd NATO ally. Meantime, India is likely to buy 26 Rafales and 3 Scorpion submarines from France during Prime Minister Modi's visit to Paris. The Defence Procurement Board has already cleared the acquisition of the fighter jets and the additional Scorpion-class submarines for the Navy. The Prime Ministers will hold bilateral talks in France, where these deals will likely be discussed. That's on Friday.